you are in the business of lending money. So it's not like you can close your eyes and just rely on artificial intelligence to tell you whom to lend and whom not to. So there's going to be an evolution.
Even after decades of digitization, 60 to 70% of work is still manual, is still not decision-based. And that's where a lot of shift is happening towards AI. That's the conversation we wanted to pick up with Satyam. Thanks, Satyam, for joining the conversation.
My pleasure.
So what you're seeing across globally, as origination volumes go up and complexity creeps in, what's typically the first pressure point? Is it the people? Is it the tech? Is it the policies? What is it?
I think digitization did a fantastic job for certain segments. So when it came to consumer lending, I think there's a fairly good straight-through processing in products like credit cards, personal loans. And then the reason for that is it's a relatively simpler segment. However, as you start moving to SMEs or to commercial lending is where things start getting complex. Digitization did a fair amount of job in terms of automating certain processes, workflows, data ingestion. However, when it came to decisions, I think it's still largely manual. While there's a lot of structured data which digitization did allow to be ingested, like bank statements, financial statements, GST and so on. But equally, this segment has a lot of unstructured, semi-structured data as well. So for example, somebody visiting the customer site, taking photographs of the premises, and there's so many things that an analyst would look at and kind of interpret based on that. Management call reports based on the responses the promoters are kind of giving. The digitization wasn't able to kind of allow for this to be a part of decision making without necessarily a human being in the loop entirely. And as you try to scale, the pressure point starts building. One, the data lying in multiple places, decisions still not being consistent. So even today, you'll have a situation that if I give the same case to two different set of analysts, they more likely than not, they'll come up with two different outcomes.
Data being in different places, systems processing being in different systems. Automation is something that is becoming a huge part of the complete lending infrastructure, right? So that's where humans decide and systems orchestrate. But when it comes to agentic AI or AI application, that's being reversed, right? Now AI is making the decision, AI is the maker of all these processes, and humans stay in the loop and are the checkers. So do you think this particular shift from humans making everything and building the whole infrastructure to AI building the infrastructure will change how banking would work in the next 5 to 10 years?
No, absolutely, and that's a great point. I would imagine and I would foresee everyone starting to think like an AI first approach. Yeah. So it's not like fitting or rather force fitting AI into your existing processes, but in almost all or definitely in certain processes, look, just flipping the conversation, right? If I have to do it with the luxury of AI, how would I do it, right? So a point in case being one of my favorite topics these days is unstructured data, right? There's so much of it sitting around in terms of management call reports, your credit analysis, credit assessment memos, industry reports, a lot of federated data, public data that's kind of sitting out there. So if you think of it, yes, I can think of bringing the data like I would do traditionally, or to your point, I could just use an AI first approach where the way I ingest the data, the way I categorize the data, the way I annotate, label, tag the data, I could actually use AI to be to do it efficiently so that it can be used later on for decision making. And then, yes, of course, have an element of a reinforcement learning there, right? So if it's not labeled it properly, how can maybe an analyst or someone can look at it and then kind of revise it?
Understood. Satyam, when we are designing the complete LOS or the origination systems these days, one question that I keep coming across when I'm putting the designs together is which parts of origination are the banks deliberately making AI-led? And which parts are they thinking to, not go ahead into the AI making because it's too volatile right now, but keeping rule-driven or want human-controlled basis there? Yeah.
If we go back to the conversation, and if I start thinking as an AI native or an AI first company, the ideal answer is is all parts of the process. The initial part is going to be a lot more around summarization of credit analysis, which is what everyone is focused. And as users of AI, the one thing everyone knows is like Copilot, ChatGPT. So you ask a prompt, it gives you an answer, basically content generation, right? So that is where it's kind of starting. Now, bearing in mind that we're talking of regulated financial institutions and you are in the business of lending money. So it's not like you can close your eyes and just rely on artificial intelligence to tell you whom to lend and whom not to. So there's going to be an evolution. So certain elements where, let's say if I'm whitelisting or certain criteria I need to apply, which is an absolute must. So a customer or a borrower being in business for so many years, or the basic bureau score should be above a certain threshold. Those, I think, at least in near future, it will all continue to be based on business rules or hard rules. However, when it comes to maybe assessment of financial statements, bank statements, corroborating that information with multiple other data sources, including maybe peer group, any other external form of data that's available, is where the use of AI would start coming in. And the way I see this is it's going to be more of summarization, not decision making. So an analyst who's possibly spending 8 to 10 hours to make this decision might be cut down significantly. And perhaps they may have at their disposal a lot more information as compared to what they used to have in the past. So it's faster and possibly makes them more effective at decision making. And just kind of continuing on my point, the way I see it is, I think the beauty of AI or large language models are like, these are natural language processing, right? So the future I see is also very conversational AI. So I see a stage where you actually won't have user interface, you won't have forms asking like, oh, as a borrower or as an RM, fill these boxes. It's just going to be like the way we interact with ChatGPT, right? Hey, I'm looking for a working capital loan. Help me. Okay. So you have a conversation that gets started and you keep providing information and it kind of, starts evaluating the borrower based on that.
So when it comes to ChatGPT and all the other AI, a lot of people in fintech and as well as other domains as well are very hesitant when it comes to guardrails, right? Where do we draw the line? How do we make sure the answers are coming out to be right? So do you think in banks and fintechs, we're ready to directly jump into the CAM commentaries and decision making from the AI perspective?
So the way I see this, and it's going to be very similar to how, let's say, a couple of decades ago, the whole credit scoring models evolved. So while everyone knew that maybe they are a much better or a more efficient tool to predict a customer's probability of default, but before implementing, there was a lot of process put in place. So similarly, with AI, I would see initially it's going to be a supporting tool that could just help the underwriter, but the decision is still made by the underwriter. But along with that, what's also likely to happen is, just like the way with scorecards, there were multiple new roles that kind of started evolving. There's a model risk committee that kind of came into play. You similarly would have roles like a data steward being relevant, who would control what kind of data is going into AI. Then you have an AI product manager, which again would be a critical role, who's orchestrating what AI models are being used, doing the AI evaluation based on the output that the model is giving, controlling, to your point, it needs to be more deterministic. So how do you control that with the right kind of prompts, which is just a part of it, but maybe the other settings in the model on temperature, system instructions, all of that are the things that financial institutions would increasingly use to get to a point where it starts becoming a lot more deterministic, a lot more explainable.
So now bringing the conversation closer to home, right? CredAble has been very deliberate in building AI native origination systems, right? The complete infrastructure of lending. When it comes to the credit analyst role specifically, explainable AI, exactly what you touched upon, becomes super important. Right? Do you think that's a very important part when it comes to credit analyst at CredAble and otherwise?
Absolutely, and it's an evolving space because what potentially can happen is, as an analyst, I've made a decision and the facts that I've used or the data that I've used to back my decision was given to me by AI. The decision has been made by a human, but there was a high degree of reliance on information that was provided by AI, and explainability of that becomes super important. And there's a whole new space evolving around the whole AI evals, right? Which is like what kind of data was used. So what's the data corpus that was used? How was it chunked? Which language models were used? And then what were the system settings? Was the AI instructed to, or the language model was instructed to answer strictly within the parameters defined? Over a period of time, there needs to be validations, whether there's any kind of a model drift, so the data that was fed is representative of the queries that are kind of coming in. Today, a lot of the language models are very generic. They're trained on, in simple words, it's like trained on general English. But how do you train them on lending English, right? Yeah. So a lot of work has to be done on that as well.
Satyam, if you had to advise a global bank today about where to start their AI journey, start or actually grow their AI journey, right? So I think most of the banks, there might be one or two banks who are not really looking into AI right now. Everybody is, but what is the right approach to take?
I think every single bank that we've been talking to, it's like high on the agenda. However, the challenge is it's such a fast evolving space and there's so much you can do that, to your point, picking the initial use cases becomes really challenging. Yeah. When it comes to lending space, I think increasingly one common area that we are seeing is around the entire summarization of credit notes. Yeah. Is like unique. It's consistent across banks that we're seeing where they want to kind of make progress. But if you start thinking of it, there's so many other things that banks can do. The answer to your question, where should they start? Like pick the high impact use cases where there's maximum return on investment and there's maximum chance of success as well, would be a good place to start. The danger is like if you spread yourself too thin, trying to do too many things, is where the challenge could lie, where you're not able to then justify returns.
AI is very rapidly changing, right? So every time from the product point of view, if I start on one pilot today, every 2 weeks, there's a new technology that has come up. There's a new method of chunking that might be better for JSON. So all of these are becoming a little difficult, obviously. But I completely agree to the point that CAM, which is the direct lowest hanging fruit, that's where we can start automating. Satyam, as a SME banker, in case your goal has to be faster decisioning, lower cost per loan, and also seamless credit quality, right? What are the 3 things that you would look at or look at building in the next 1 year?
So rather than dwelling into specific use cases, in my view, the most important things would be number 1, getting your AI architecture right. And what I mean by that is, the way I see is your large language models are going to evolve and they're going to be more commoditized. So how do you build an orchestration layer which knows which language models to pick, which are best for purpose, which embedding models to pick, and so on. So getting the entire architecture right, which allows you to implement multiple use cases. Number 2, getting your data corpus right. I mean, it's extremely important, particularly if you're operating in a regulated industry. And number 3, I would imagine over a period of time, there's an opportunity to build focused language models or small language models based on your own data corpus, which are fit for purpose, more powerful, more effective for a very specific use case, like let's say maybe unsecured business lending as an example.
So if we zoom out now, what is very clear is AI is not changing how we lend, but how the decisions are being made, right? The industry is currently asking for us to build on AI models to make better decisioning and faster decisioning. That's where this conversation, Satyam, was really helpful, and it actually made a lot of sense and made clear of why should I really build AI products. Thanks for that. And in any closing remarks from your end?
Yeah, so you're absolutely spot on. So the way I see this is, one, it's definitely going to create efficiency. So anything that took like maybe a day or 2 days would be done in few hours or few minutes. The second and more important thing that it'll do is it'll make people better at decision making, like a credit analyst. RMs would exactly know what kind of products to recommend. And at the end of it, customer is going to be the winner. So it's an exciting space. Do keep looking for what CredAble is bringing to the table in AI.
Sure. Thanks.
Thanks.
Built by bankers, powered by AI.